And we are live here. It is Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time, looking at charts, breaking down the news, having discussions, hopefully providing you guys some insight and some analysis so that you can better run your daily routine. We've got the coach from Tackle Trading here. We've got Coach Matt, myself, as always. I am your host, Tim Justice, and we've brought the great, the powerful, the architect, Coach Tyler Craig in here to analyze markets today. Let's start with introductions. Tyler, how you doing, sir?
Well, Tim, I told you pre-show, not everybody knows. I broke my pinky, but I play injured, okay? I don't let a broken pinky, even though it hurts every time I touch that keyboard, I'm not going to let it stop me, and I still show up for the team. So I'm excited to be here.
Playing through injury, Matt, do you give Tyler a little bit more credit today? I mean, we are talking about writing a desk job here.
I mean, Patrick Mahomes, played with turf toe, and Tyler plays with broken pinky. I mean, they're equivalent.
It seems like the same.
Yeah.
It seems like the same. Tyler, I am sorry that you did break your pinky, my friend. I'm not laughing at your injury at all. I guess working in the garage over the weekend, pounding out some stuff with a hammer. Is that right?
That's why I work at a keyboard, and that's why I'm not a handyman, okay?
Tyler picked up a hammer for the first time in 20 years, and he broke his pinky. That's all that needs to be said.
Exactly right. You needed a mentor, but it is. Let's talk markets here today. We got some earnings roundup, Lyft and Twitter and Cisco, some other ones. CCJ, which is a company I've had interest in, small company on one of our dirty, sexy money lists. We'll take a look at some of these company earnings in a little bit. Markets are hesitating at the high, actually picking up a little bit of pressure off of the very tops of the candles. They actually picked an all-time high early in the day. Now they're selling a hair. Is it a potential pivot point? We'll analyze it. Markets are still bullish and strong, but we'll talk about the technicals of what's happening. Then there's all these little blast-off stocks that we've been seeing here recently, and we'll have a discussion about some of those. Coach Tyler published the newsletter on the Trading Justice website. We'll go through and talk about that content, and we got Coach Frank's charts later in the show from Twitter. Coach Frank, who's here every Friday, he's given us some charts to look at that he's paying attention to here midweek, and we're going to go through those with Tyler and Matt and myself later in the show. First thing, though, Tyler, if you can, go to the Tackle Trading website real quick. One thing we announced last week, guys, and we've been putting it out there each and every day, and we're going to continue to do that at 11:30 Eastern, is the huddle. And I'm going to drop the link in the chat here in just a second. But the huddle, Matt, can you talk a little bit about what this is and how our audience can use this daily resource?
Yeah, I am. The huddle is going to be a podcast, and we're going to be releasing that podcast very, very soon, probably within the next week or two. And in preparation, basically, we just wanted to give our community a product that they can go to every single day on the fly, whether they're on their commute to work, or whether that's on a train, in a car, or, walking in their hallway these days. But we wanted to give them something that they could be familiar with what is happening on a daily basis in the market, the top 5 storylines in the market on a daily basis. And, the people that have been enjoying the huddle so far, the reviews have been very, very, very positive. So each day, our community goes to the huddle and makes sure that they get the top 5 storylines for the day, just to be familiar with the high level stories that are impacting the market on a daily basis. And I personally love it because it summarizes kind of my daily routine a little bit in the morning, and it makes life for all of us a little easier.
Yeah, I agree. We're having a lot of fun. We're very excited over here at Tackle Trading to release this new daily resource for you guys out there. #Team Tackle. Go to it on a regular basis.
And very quickly, we're just getting the audio approved through iTunes right now with the podcast, and that does take some time. So we will have the podcast up and running in that very soon.
Absolutely. All right, guys, let's talk markets. Here's a simple question I got for both of you, and let's bring the S&P 500 up first, and we're going to go through the indexes. What do you do on a day like today here, Tyler? We definitely are what we would call swing range up, right? I mean, you're at the top end of the channel. Anybody can see that visually, but we've also had market conditions just right on the chart we're looking at between November and January, where we stayed at the top end of the channel, a couple of hesitation days, and it would keep trending right on those moving averages, including the 9 and the 20 holding support. So do you overreact? Do you think about it? Do you say, okay, we're pivot high? Do you hesitate? What do you do with a day like today, Tyler?
I think going into a day like today, you should have already established what am I going to do if the market pulls back a few days. how am I going to respond to, a retracement? If you've made money over the past week and a half, which everybody has if you have bullish trades, the question is, okay, now what? If we do pull back a couple of bars, are you willing to sit through that? Do you have enough space in your trades relative to where your stop loss is? I think the mistake here, Tim, is not thinking about that and not asking the question. And then we get 4 red bars and you sell crap. It's like, why didn't you sell it when it started to go down? So it's one or the other for me. Either I'm swing trading certain positions and I'm out at the first sign of weakness and I'm peeling some off, or they're position trades or cash flow trade. Then a red bar like this, I don't do anything. I just let it be.
Mm-hmm. And obviously, if you're in current trading plans, they're in the middle of a progressing trade that's doing well, you're not going to just overreact because the market's down 0.25% at near an all-time high. On the same day, it literally just hit an all-time high intraday. But I mean, Matt, we are range up. I mean, how do you approach this from a mindset perspective?
Well, I don't think you approach it from a mindset. You approach it from a technical perspective. Tyler's absolutely right. You're overextended on the short-term price action, and you expect it to consolidate or pull back a little bit, and you trade accordingly.
Mm-hmm. Mm-hmm. Tyler, give me a thorough technical read on these different indexes.
Now, I don't think you overreact to one down day in the market or one short-term pattern. You let the pattern develop. We talked about this yesterday and the day before, on Monday and Tuesday to start this week. In fact, we talked about this pattern developing last Friday when we were talking about the scatter report meeting. You broke out of the market last week. You were overextended. You had a deeper pullback than you typically do. So you were a little bit of a range up going into a breakout, and you really, I mean, you're bullish and you're bullish in a stock picker's market, and you're going to manage those positions accordingly. But in the broad market conversation, yeah, you're definitely slowing your momentum, and you expect a little bit of a high base or a flag to form.
Mm-hmm. And for me and from both of you guys, I mean, I know I still got a lot of really good candidates on my watch list that I'm waiting to take trades on. And even with the markets up where they are, I'm willing to continue to add to positions, and put new trades on it. If they can map out themselves well, it's been a stock picker's market, and we still are bullish in an uptrend, right?
Yeah, you're not going to get too concerned over a potential bullish flag pattern or a high base forming.
Mm-hmm.
Those aren't going to be concerning. And quite frankly, even if it does pull back, where's it going to pull back to? It's going to pull back a couple points down into 380, 385, 386, 387, and it's going to form a good pattern. So I don't think you get overtly concerned. You trade the pattern, but no, I don't think you should be too concerned about it.
Mm-hmm, mm-hmm. Tyler, flash through the 4 indexes if you can. Give me a technical read on all of them, and then we'll have any conversations that come from it. Go ahead.
Yeah, I feel like the more attention we point to this red bar, the more it's going to just go right back up.
Yeah.
Screw you guys! Don't even talk about a pullback.
Just stare at it. That's all you got to do these days.
Come on, man! I wanted a couple of red bars. I need a pullback.
Use your Luke Skywalker Jedi powers and just turn that little intraday corner. Just turn it green, Tyler.
I'm telling you, it probably will be by the time I'm done with these 4 charts. We'll see.
Well, yeah, I'd like to see you get a different technical read on these 4 charts.
Actually, challenge of the day.
We'll see.
Challenge of the day.
Well, okay. I mean, you can see relative strength, relative weakness, but you're certainly not going to see a major difference in the pivot formation. But let's see. So I don't know how in depth I go in here, but look, this is a red bar. It gapped up this morning and it sold off. So when you look at this intraday, they rejected that short-term, strength. Really, you look at today's candle and it is bearish. We're below the moving averages short run. So in the short term, yes, it's pausing. The problem is every single time anybody has reduced exposure for the last 3 months, 3 days later, they feel like a moron, right? And so it's like, well, the market has paid you not to overreact to your previous point. I'm still like, why did I get smaller over here? I was prudent this sell-off 2 weeks ago, and everything I sold back there is at higher prices now. So, but yeah, nothing to see here. I think you got to be impressed by how well it bounced back. I mean, that's pretty nasty this morning. And then it's like, no, I mean, this is what bears get. They get 30 minutes worth of fun, and then they're like, see you later, guys. That's it. You had your fun. Get out of here. So short run, a little bit of weakness, but you could argue this both ways. We bounced off the lows. So that's the S&P. That'll give you a benchmark, and then we can compare the other indexes to where this guy's at.
We can skip the Dow. We're kind of thinking about throwing it out. So.
Oh, well, I wasn't even thinking about the Dow.
Yeah. Well, we met the great market
Yeah.
minds. We all kind of came together collectively. We've been sending smoke signals and pigeons with messages around the globe, and we're like,
we're just killing the Dow 30 here.
I don't know
That's
if we
fine.
need it anymore.
That's what we're doing.
That's fine with me.
Okay.
NASDAQ, I'm going to say same thing. Same thing. I mean, this is the first bar that's made a lower low. This is the first time we broke a prior bar's low. So that does make today's price action different than the prior 6 or 7. But again, you popped right back off of that sell-off. Like the intraday looks just like the S&P. So,
well, there is some context to that movement in the morning that a pure technician may not see.
I didn't see it. So tell me what the narrative. Yeah, what was it?
It's the CPI report. And so if you look at 6:30 on your chart there this morning, you'll notice that gap up was based on the futures price movement at that time frame when the CPI report was released. And so if you'll notice what happens, and honestly, you're seeing a little bit of a normal price performance on an economic report, and this is not normal in this market condition, but this is fairly normal for typical economic reports that we are not in a pandemic. And so you did have the CPI report come out this morning, and it did come out a little bit of a mixed report here. When the number came out at 0.3 versus the expectation of 0.3. And that was the CPI report, which does include food and energy prices. The core CPI report came in at a miss, 0 against the 0.2. And so when the initial came out, those numbers typically get bought up by the market, given the fact that inflation isn't showing its ugly head, giving the Fed all the ammunition in the world to do more monetary policy, more dovish actions, more stimulus, all of that jazz when we're looking at inflation and the central bank. And then you have this realization moment where it's like, wait a second. So we really are seeing inflation because you had a disconnect between the core CPI report and the actual CPI report, where you had 0.3 on the actual CPI report and 0 on the core, and then you have this realization moment where you're like, wait a second, food and energy are going up a little bit more aggressive. Maybe this isn't actually good for things. And so you did have a little bit of a mixed reaction to the underlying economic report this morning, which initially the algorithms bought it up, and then the realization of the cash open happened an hour later, and it created a little bit of a volatile event is what happened, and that's why we're seeing a little bit of mixed data here today on the technical charts.
So we're at the point in the cycle where too much inflation is always bad, but especially right now, you're saying if we get whiffs of big inflation, market says Fed's going to take away the punch bowl. We don't like that.
And both sides of the ledger here, because it's the disconnect between the core CPI report and the CPI report that is causing a little bit of confusion. Where you had 0.3 increase in your normal CPI report, which does include food and energy, and 0 in everything else, it did give a little bit of a disconnect, saying, okay, initially you're like the 0% inflation. Oh my goodness, everything's gravy train for the central bank out there. And then you're like, oh wait, there is that secondary report called the CPI report that does include food and energy. And we are seeing inflation creep up in those areas. And those areas, specifically food and energy costs, guys, those are big additional costs for consumers. Those are really big additional costs for consumers. And so even though we're not seeing that in chips and technology and things like that, we are seeing that ugly inflation start to creep up a little bit. So just today, I do think this report gave it a little bit of a misread, and the algorithms bought it up based on how they have performed in recent history. But again, in the back of all of our individual collective minds, we're a little bit worried about inflation, and we did see that today. And so a little bit of a mixed report is what you had. And because you had a little bit of a mixed report, given the fact that you are at the top end of the chart, it's going to create a little bit of additional volatility.
Well said. Well said. Yeah, I didn't know that. That's what I get for not looking at news. I think.
Sometimes I wish I was just a pure technician.
To each their own, and I appreciate that both of you are who you are, so we can get all of that analysis right there. But no, yeah, absolutely, that gives it some context for sure. So now, Tyler, do you see this as a different read now that you have that context?
No,
technically it's the same rate.
Yeah. Well, look, I mean, I thought about this earlier in the pre-show. Anything, we're at a point right now where with the market being overstretched, overvalued, whatever you want to say, like any kind of speed bump, unexpected news, a sign that things are worse than we expected. I mean, anything, like when the market has not had a correction in a while, you just don't know like what it's going to take to finally give you a rug pull. But you just expect it, right?
Yeah.
So that's true. Like when you're looking at the market over the last 6 months or the last year, it's also true when you're looking at the market in the last week and a half. It's like, look, small caps are up 7 bars in a row. If you rewind to that fear that we had a week and a half ago, the big VIX spike, the Russell at 204. If on that day I'm like, just chill out. In 7 days, we're going to be at 230. We're going to go straight up 10%. Just chill. You're like, yeah, right. Did you see what just happened? No, just trust me. Nobody would have said that. And yet we just went up to 230, like in a straight line. And so, yeah, you've gone up a lot in a short period of time. And if at this point a couple of red bars or some random news causes a sell-off, of course it does. I mean,
well, and that's pretty normal too, Ty. I mean, how the market behaves when the market is, a little bit of range up versus range down. Yeah. I mean, the market behaves differently around different economic reports, right? And so, like, for example, if this CPI report came out a week ago with the Russell at 210 and the S&P clinging to resistance and the NASDAQ fighting for a breakout, I do think the market behaves a little bit differently on this economic report than it does after 7-8 days straight up, and the market responding very bullish. And it's almost like just psychologically we use these moments as a way to make a decision. And typically, because of where our eyes are, our eyes towards the top of the chart, we're going to make a decision to lock in profit. Versus when the market's sitting at a support level, we're going to use this as a justification for price appreciation. And it's just it's something that happens over and over and over again. I don't think we should overreact too much to today with CPI. It was a mixed report, and that's the only reason I think we're seeing a little bit of the mixed volatility.
And Matty, just so you're aware, getting a little scratching.
I'm hearing the scratching.
Gotcha. Let's keep flashing through here, Ty, if we can.
Can I say one thing on that,
Absolutely.
Tim? Yep. The technician's phrase is news follows price. And so think about how often there's a news catalyst, to Matt's point, when you're at support. And it's like, the news caused the bounce or breakout, right? You're sitting right at resistance and then you get news and then you get the breakout. That happens all the time. And it's almost like just an excuse. I think there's the catalyst. That'll be the catalyst to incite the pullback in the case of today, or to create a breakout. So great point.
And more than anything, it's just to be familiar at it. When you are range up in the market like that, and you have some important news coming down the pike, you just know that you're maybe let off the gas a little bit. You got a yield sign coming up, maybe slow down a little bit. The market's overextended. You got some major news coming out. We expected a high base to form. We expected a flag to form. Whatever the market wants to use from a news perspective to form that pattern, let it.
Yeah. Yeah. Tim, to finish up by that beam real quick, so I got one more thing on this. This is the strongest. So if you want, what's the variation here between the S&P and small caps? Small caps continue to just destroy. And one of the beautiful things about trend following is the whole narrative of cyclicals, the reopening. You could have identified that 3 months ago, post-vaccine. And the beautiful thing is it's continued to work like again and again and again and again in those types of markets where it broadcasts, hey, this is the narrative, this is the theme we're running with, climb aboard, and then we'll just stick with this for 3, 6, 9 months. It's like, okay, I mean, you made it pretty darn easy, as long as you're stuck with it. Every month, Tim, I sell a covered call on this, and every month I look like an idiot. And I'll just let everybody know, I went ahead and rolled up to the 250 for March. So dollar to donuts, this is going to be at 260. Okay. The pattern of making me a fool will continue next month.
If you're a covered call writer, it always can be a moment of emotion or frustration when your equity, your ETF, or your stock moves up and in the money. But I want to remind everybody out there that's actually a good problem to have when you are moving higher and you got to deal with all that, because that means the trade worked, right? You gave up your obligation
And
at 250.
Don't steal my complaints. I will pick what I want to complain about.
Stop complaining about making money.
Listen, last month I'm like, it will not get to 230. I'm going to go like way far out of the money, 230. And sure enough, we got 10 days left and it hit 230 yesterday. And I'm like, this is just great. This is just great. Never mind that I made $25 on the stock, Tim. That's what I'm not focused on.
It's terrible when Tyler's hedges don't work out.
His underlying asset appreciated 10%.
Yeah,
cry him a river. Cry him a river.
Yes, right. I want the sympathy. Bring it.
No, the theme around small caps is a good point.
I thought as a society we stopped caring about hedge funds. And
Tyler's Main Street. He is a relatable young man with good dad jokes. Come on. No. I got nothing else on equities. The index is right here, guys. Let's move into commodities. Let's go crude oil, gold, the rest of them. Make sure you take a peek at copper, by the way. We were identifying that copper potential breakout, and copper actually is making a pretty nice move here today. But let's start with crude, Tyler. Range up, approaching 60. What do you see?
Man, come on. So you're telling me, Matt, that when they looked at inflation and they incorporated energy into it, you're telling me that there was a little bit of inflation, huh? Because I totally wouldn't have known, given that crude oil's gone from $35 to 60 in the last couple of months. So sure, give me some more inflation. I mean, the energy stocks are doing very well. Hey, look, no wonder small caps are killing it, right? This thing's up a gajillion bars in a row. I don't know, man. This is a good chart. It's pretty. It's overbought, to be sure. But good thing we turned bullish on crude oil, 3 months ago. It's been so well behaved ever since.
No question, it's a bullish chart and all that kind of stuff. We're a little bit extended. It is putting a nice backdrop on energy companies, though. I'm still looking at many that I think are setting up well and whatnot. But we're pushing that $60 mark. Matt, anything you want to add on crude here?
No, overextended, range up, wait for consolidation and retrigger above 59.
Okay.
It's why you want to pull back. It's like, just give me the dang red bar, okay? It was down 0.25%. Can I get a little more, please?
Everybody in the world would freak out over a $5 retracement in crude oil, and it would be beautiful. It would be absolutely beautiful. Like everybody the economy's tanking, the end of the world is happening, and a bullish retracement just formed on crude. Just give it.
Yep. Totally agree.
Let us give a buy when everybody's saying the world is ending.
Yeah, I like being a contrarian as well. Here's one challenge as well, Tyler. Give me something new on gold. What are you seeing?
False. Support break. Fake out. You dumb bears. You thought gold was done, and it came right back up 4 bars after that breakout. Failed breakout. That's my new. It's new, but it's not new. Hasn't gold been doing this? It's like, I'm a directional asset. No, I'm not. I'm a directional asset. No, I'm not. It's just not going anywhere.
Choppy in a range for me.
I don't know if I'm ready to start crowing as a bull yet. I still think it's got some pain to fight through, I think, on gold.
Tyler's bringing his moxie from small caps into the gold analysis.
Yeah, he's like, small caps. You want me to analyze gold? 4 days up, go time.
Listen, if we did this in March, I would be a different person. Okay. Yeah.
I got nothing else on gold. Silver looks the same, but take a peek at copper. Matt and I were looking at this yesterday. We were talking about Freeport Mac Room with Coach Emily, and Gina was even here for that one, and Coach Mark. Beautiful moving copper here. We are catching that breakout confirmed. I don't know if we confirmed yesterday at the end of the day or not, but I know today is for sure. Yeah, Tyler, give me a read on this strength.
Well, what's nice about continuation patterns is when you're in an uptrend, when the primary trend is up, you assume that consolidation or digestion or pauses resolve themselves in the direction of the primary trend. That's charting 101. And so, surprise, surprise, a stock or an asset, a commodity that's been in an uptrend for 6, 7, 8 months, paused for 2 months. Did it break lower? No, it broke higher. That's the way it's supposed to work, right? What would have made you a little bit disconcerted or need to change your outlook would have been if it broke lower. Hey, it made you wait a little bit, but now you're being rewarded for your patience. Not the cleanest base. I mean, the reality is it was a little messy. You had higher highs over here, and then you had some lower highs. And quite frankly, Tim, again, you go back a week and a half ago, you could have made the case, copper, potential rounded top here. Watch that 350, okay? But it did, it went higher. So to its credit, had it broken below 350 first, that would have made it challenging, because it's like it faked you out on the downside. But see, that's I think a telltale sign of a healthy market, where it makes it easy to participate because you don't get these scary support breaks, you don't get these scary shakeouts. It's hard not to make money. You're forgiven if you don't make money on something where it breaks support and then it reverses and goes higher. Now you got snookered in, everybody, or you got shaken out. Everybody, that happens to everybody. But a situation like this, it never really gave you any major warning signs, and lo and behold, resolved itself higher. It's pretty. I like it. I love it. It's a little extended like everything else, but looks great.
And specifically regarding copper, obviously all of our minds and heads go straight to FCX here. And we were looking at FCX recently. If you'll go to FCX on the chart here, Ty, I do think it's important to kind of break down this chart on FCX a little bit here today, because it did try that aggressive trigger, came right back down. Now it's to the point where you really got to see a close above that 3250 before it's go time. It got caught up in the futures market, right? Because copper is a futures tradable instrument. And so, futures started, in copper specifically, copper started running pretty aggressively right after the market closed yesterday. And so it ran from all the way from like an hour after the market closed all the way into this morning, And so what happened a little bit with the futures on copper going up so aggressively, it caused a gap in FCX as well. Yep. And then it immediately got sold off on the cash open, got caught up in the volatility. And the reason I wanted to bring it up is, FCX is on a lot of our radars constantly, right? It's one of the stocks we enjoy trading from a variety of different systems. And, I know a lot in tackle trading have their eyes on FCX, not just today, but over the course of the last year. And so I did want to bring up FCX today, because if you look at the daily chart, this looks like a massive failed breakout to a certain extent, and it gives you a little bit of caution because of that test up, right? But again, I do think context matters, because when FCX gapped up on the strength of copper last night, and then all of a sudden you sold off with the market. When you look at this intraday, though, it tells that story a little bit clearer. And then when you came down, you came right back down into the support channel on the before the breakout, and now you're kissing against that 32 resistance level, which means to me that 32.5 trigger that we talked about yesterday is still an appropriate trigger, even with the wick from yesterday from earlier this morning.
Yeah, I got a couple things on that. I think that the thing that came to mind for me is not all breakouts are created equal. Was this a breakout this morning? Yeah, anytime you go above resistance, you can call it a breakout. But just because it's a breakout, doesn't mean I don't like all breakouts equally. So
Yeah.
when a stock is setting up for a breakout, you have to look at where did it come from. And so in the case of FCX, it had run into the breakout. And
Yeah.
you guys might have even mentioned this. We mention it all the time. If a stock runs up 7 bars and then breaks above a prior pivot on the 8th up day, yeah, it broke resistance, but it ran 7 bars ahead of time. And so you always prefer that if you just had a big upswing to resistance, that you get some digestion or a pause, so that the breakout can be a new swing, right? And have gas in the tank. I think there were, so yes, the future ripping in copper and this having to gap up off the bat probably worked against you.
It did.
Plus the fact that it was up quite a few bars ahead of time. And now, to your point, intraday, you could definitely map out a decent breakout point.
I just think the daily is going to give people a really big misread on that felt candle here today. Because again, I see this more as just getting caught up into the future cycle and then getting beat up based on what the market did today. So basically, FCX, none of this price movement had anything to do with FCX. Like none of it did. And so when you're looking at this intraday, I just think you're coming back to the exact same read you had before the felt breakout. You're still looking at that 32 by 32 and a half handle, and you're saying, okay, if we can close above that level, we will see that next leg. And quite frankly, I would love to see another 2 days of consolidation and have this trade be next Monday.
Yeah, I got no problem with that either, because if it does just hang out, we've got that clear trigger intraday,
especially to make sure that trigger stays solid.
Yeah.
Well, and it says something about the stock that it reasserts itself after getting punched in the face on the first attempt, right?
Yep.
So if it can bounce back from this morning's rejection and break out anew, you would think that the second attempt is stronger than the first.
The daily is going to be difficult because of that failed breakout. Yeah. But I think the intraday analysis here is going to be fairly straightforward. If you hold slightly north of 31 and you hold that range between 31 and 32 over the next 2 days, you're going to have a good trigger either above 32 and a half or 32.
Agreed.
Okay. Fair enough. Lastly, on the skyline here, give me the dollar and Bitcoin if you can, Ty, and then we're going to get into some stock talk. Tim? Of course, my young man.
Hey, wouldn't it have been nice? Wouldn't it have been nice if we brought FCX to people's attention on this pullback right here? Like if maybe I brought it up during.
Act like you've been there before, Tyler. You ever heard that phrase? You understand that from sports? You won. You had a great pick.
I have no idea what you're talking about.
You get into the end zone. You hand the ball over to the referee, right? You just say, okay.
Guys, let me have my moment. What was the next one?
All right, Crow and I see it. You did. By the way, Tyler did bring up FCX about a week and a half ago when it was down there on that pivot in this exact show, talking about the depth of that and whatnot. So I can give you some credit on that, Tyler.
Well, and in my defense, it's not really to Crow. It's more so to show why we liked the setup, right?
Yeah.
Obviously, had I known it was going to do this, I wouldn't have pitched a naked put, which is what I pitched. I'd have pitched buying far out of the money calls. I'm not that good. You don't know how it's going to resolve. But the point is, if you can see these patterns enough and put yourself in positions where you have good entries, it makes it more likely that you can participate on the type of stuff that FCX just did.
I agree.
That's more the point. What was the next one?
The dollar, Bitcoin, then stock talk. Let's keep pushing through the show here. And I see the chat's lively today. Always love seeing that team tackle. What are you seeing in the dollar here, Ty?
So much for that breakout attempt. JK, bear trend back on. Pardon the interruption. That's what UUP is saying. It's back to bearish. I mean, what do you say? You did not want it to pull back this far if you were hoping that we'd continue to see dollar strength. So I would call this a failed breakout attempt. I would say that whole beautiful bottoming pattern is now rendered invalid, and it's now in the bear's court. I mean, this thing has to re-break out again for me to get anything optimistic. Yeah, I'd be curious to see what Matt has to say on this, but Matt, it looks to me like it's going back to the downtrend.
I have no fundamental bullish argument for the dollar. Like that does not exist. And it's Janet Yellen, and they're going to put a ton of money out into the market.
Yeah.
The only thing you really need to understand, I guess, from the dollar perspective is if you've been enjoying assets going up, keep cheering on the dollar going down.
Well, and the other thing that I've noticed this week is on the back of the dollar getting smacked, emerging markets, foreign stocks, right, which tend to do better when the dollar's weak on a relative basis.
And they absolutely should.
Gone gangbusters.
Yeah.
They've gone gangbusters. So on a relative basis, weak dollar also good for having some foreign exposure in the portfolio. So yeah, Tim, bear market back on, downtrend back on. Sorry for the little bull interruption there, but
listen, give the dollar its 3-day bull run. It had a good bull run. It had 3 days. It was good.
Reversal pattern got shaken out there, no doubt about it. Lastly, Bitcoin, if you can, a little flag developing up here after just a tremendous bullish run over the last couple of weeks. What are you seeing?
I'm just wondering if I want to bring up Elon Musk for a second, but a couple things. First of all, the whole thing about an overbought breakout apparently doesn't apply to Bitcoin. So Bitcoin can run into resistance and then break out and go up 10,000 points because it's Bitcoin. But look,
listen, it would have been at 60,000 if it came from a proper support level.
Probably so. Probably so.
It's so crazy. The Bitcoin market it's a nightmare to read technically.
But yeah, it was a breakout. And now I want to pull. I mean, yeah, it probably flags or pauses, but it's still strong. I mean, I'm impressed. Look, if we go back 2 weeks, actually, you believe anything I'd say on Bitcoin. I believe anything anybody says on Bitcoin, but it's like flirting with a breakdown at 30K. No, I'm at 50K, right? Don't even second guess me. It's impressive. It's bullish. And I will say I bought my first Bitcoin last week.
Look at you.
Wow.
Look at you.
And by Bitcoin, I mean my first 0.000
whatever it was.
Oh no, we understood it was the 10-cent deposit into Coinbase. We knew.
Hey, it was $100. I'll have you know. So I can speak with authority now that I own Bitcoin.
You had to join the party. I like it.
Hey, it took it going to 50K, but I'm like, all right, it just went up 20 grand in 3 weeks. Sure, I'll top ticket. Let's buy some.
I think the only trade here you could be looking at is a retest of 40,000.
I agree. Yeah. If you get some kind of retest old resistance, yeah.
Technically, somebody tried to read this technically intraday. Like give me a 30-minute like.
It's just flagging. I mean,
it's all over the board. So it's tough. It's a tough intraday, and it's been tough that way, honestly, ever since Elon. Ever since Elon made his announcement, it's been it was very constructive. And don't get me wrong, I'm not railing on Elon at all. I just wish he would stop talking about certain things sometimes. And quite frankly, I'm not sure he adds to the conversation here. I think Bitcoin would have been far more constructive and a better tradable instrument if he didn't throw it into that.
It's happened a couple of times in 2 weeks, even. I mean, it blew up the chart a little bit for a few days, 2 weeks ago when he was hashtag Bitcoin on Twitter, and then the announcement blew this up a little bit here. But it can create those short-term 1-2 day bursts, obviously. And, if people can take advantage of it, great for you. But for anybody else trying to map these things out, you got to wait for a deeper pullback. Probably better setup. Yep.
For any entry, I think you're looking at that 40K handle and you're saying, let me get a test of that 40K. That was a pretty good resistance level that it formed there at 40K. Yep. It tested at multiple different times there from an intraday perspective. Obviously, it's a pivot point right there at 40 to 42. So I do think at this point you're technically you got to have the opinion you're range up, you're overextended. That doesn't mean Bitcoin can't fly. We know Bitcoin can fly and do whatever it wants to do. But from a technical perspective, if you're waiting for a proper technical setup, at this point, the intraday analysis between 44 and 48 is just too difficult, in my opinion. What that means is you're probably waiting for something a little bit deeper on a pullback into that 40 to 42 range, or you're waiting for that intraday high base to clean itself up.
Yeah, I think that's fair. All right, guys, that is our skyline. It's what first thing we do in the show every day, where we go through the broad markets, any major news that's happening that affects the overall broad markets, commodities, currency markets. We analyze it then. Now we're going to move into stock talk and look at individual company names that are impacting markets here today, including earnings and other announcements, upgrade, downgrades when they're appropriate.
Now,
we've got earnings roundup today, though. So
if Elon would have waited a week and let that consolidate underneath 40,000, I would have a different opinion on that. Just let it set up, Elon. That's all.
He's not timing well. He needs to
let it set up.
Listen, he bought 1.5 billion and he's like, I need a quick 20% return.
I get it. It's amazing, the power of old Elon Musk. It truly is astonishing.
It's pretty crazy, pretty crazy. All right, let's do some stock talk here, guys. By the way, if you're out there watching the show right now, I appreciate those thumbs up. Let's get them up there. We got 31 right now. Let's get up to that 50% mark. Give me 50 thumbs up here. I'd appreciate that, Team Tackle. If you're brand new, click subscribe, click the bell, come back and join us whenever we go live. Earnings roundup. Cisco, Lyft, couple of big ones. GM as well. Maddie, you are up.
Hold on.
I hear you typing.
Can I ask the team a question while he's typing?
Mm-hmm.
Yeah, I'm back. I just wanted to respond to Swin's question, because I like that game, right? It's just a random game, but it kind of puts you where your thought process is. Swin says, if Bitcoin more likely to go to 100K or drop to 25K? I mean, it's just a game. We don't need a technical challenge here.
The most likely thing to be touched first is 25K, in my opinion.
I know, but
we have to think about the fact that we have to debate
We've been wrong on that so many times, and that's what I said to Swin. I'd say 25K is the most likely, but like everybody's been wrong on that game forever on Bitcoin.
Yeah.
So like, at some point we're all just be like, there's no resistance. Just like resistance is futile here. I agree.
Agreed.
Is that
no, Swin? That's why I like the game as well. It's a sediment game, is what it is, and so you just try to get the sediment for what everybody kind of feels, and so when most people say 25, it's like, yeah, we don't trust what we're seeing, right? So I like the game too from a sentiment. It really kind of just puts you where your mind's at a little bit.
I say 25K. I got another $100 with Bitcoin's name on it.
Wait. Are you letting us know your dollar cost averaging strategy on Bitcoin here, Tyler?
100%. What, you think I'm going to go all in when I top tick the stupid thing at 50K?
I like it. I like Tyler saying, you know what? I'm just getting ready. Ready.
Yeah. I got no problem with Bitcoin holding, by the way, Tyler, but have you heard of Ethereum? Do I need to get you interested in a second crypto here? Is it too much?
Hey, as soon as it becomes available on a mainstream broker like Tasty or something, I'm in.
All right. Enough of Bitcoin. Let's talk stocks here. Let's do some earnings roundup, Matt, if we can. I'll let you just kind of run wherever you want to go.
Yeah, Tyler, let's first start with Cisco here. And the reason I want to start with Cisco is one of the bigger companies that reported earnings in the last 24 hours. But, it had a little bit of a mixed report. I think it's an interesting gap candidate. And for those of you that read the huddle, you'll see that in the huddle that, because I'm the one who did the write-up for Cisco yesterday for the huddle. And I said, you know what, because of the beat on earnings, but because of a little bit of concern about growth coming at it, it's going to be an interesting gap candidate. And it is certainly an interesting gap candidate. Want to get Tyler's take on that here in just 1 second, but let's give the raw numbers very quickly. Cisco reports 79 cents a share versus the expectation of 75 on EPS. Revenue came in slightly above expectation at 12 billion versus the expectation of 11.9. That did account to a 0.4% decrease in growth for Cisco year over year, and you're going to see the growth concern here on Cisco, and that's really what's kind of driving the price here today. Is just concern coming down the pike regarding chip manufacturers and so on and so forth. But revenue declined for the 5th consecutive quarter. There are two very important aspects of Cisco's company is the infrastructure platform business as well as the application unit business. And specifically in the infrastructure platform business, they came in slightly above the expectation at 6.39 billion versus the expectation of 6.23. The application unit is very concerning here, and that's causing a little bit of this pain we're seeing on Cisco. And I know the pain is just short term. I think it is a fairly decent bullish retracement, quite frankly. But the infrastructure platform and the application unit, think Zoom. We all love Zoom, right?
Mm-hmm.
Well, before we all loved Zoom, we all loved Adobe, and before we all loved Adobe, we all loved WebEx, and that's Cisco. So when you're talking about the application unit business, that's their WebEx, online learning, the Zoom competition. They compete with Microsoft there. It's a growth area for Cisco, as is the infrastructure platform segment for Cisco. And application unit came in underneath the expectation at 1.35 billion versus the expectation of 1.4. So the growth concerns that you have in Cisco were not alleviated based on anything we saw in their actual report. Again, 5th consecutive quarter of declining revenue. They missed on application unit, slight beat on the actual raw numbers. And so the biggest concern, though, is something that I've been seeing in other earnings reports, specifically regarding anything around semiconductors and specifically chip manufacturers. Cisco, like many others before in this earnings season, it's something to keep an eye on as we navigate 2021. Cisco warned of supply headwinds. This is something we've seen in a lot of tech companies based out of the US. These are warning on chip manufacturers coming overseas, getting that supply chain, working with them. Right now, it's working against them, and they do expect this to be significant enough to curtail their growth expectations, and that's what's happening here on Cisco. Slight beat on EPS, slight beat on revenue, but concern from a growth perspective and headwinds coming at us from a supply side perspective caused a little bit of a pain here. But again, I do think it's a little bit of an overreaction. We have seen many other companies, in this quarter talk about the headwinds of chips coming out of and making sure that they can get it. And anybody that's wanting to buy a chip, I've been wanting to buy a chip. It's concerning out there right now. So that chip story that we've seen starting to develop right now, that's going to be a storyline that plays out for the rest of the year. We need to keep an eye on that because it's a little concerning from an economic perspective. The raw performance in Cisco was a slight beat. The front-running behavior we've seen in the market has not paid off in these earnings season. We've seen a great earnings season, a robust earnings season, but the front-running behavior has not been paying off. And what we saw in Cisco, front run, gap down, just destroy the front running. Now you're looking at Cisco as a little bit of a support scenario. Tyler, give me your technical read here. I do think we're seeing a little bit of an overreaction to a lukewarm earnings report, given the fact that you were overextended coming into the earnings report.
Yeah, this is pretty. If you missed out, if you were looking at this yesterday in the earnings, that was a good breakout. That front run into earnings, that 3 bars. And I didn't trade it. So I'd be like, oh man, go back to 46. Give me a second chance. If this had like a multi-bar pullback down to 46, you'd be like, oh, that's great.
You would love that. You would have it
That's
as
right.
an increasing momentum trend with a trigger
That is right.
above, with an aggressive trigger.
100%. And so it said, I ain't gonna make you wait. I'll do it overnight, right? So it gaps down overnight, and this, I think this is a good lesson to where just because the stock gaps down on presumably bad earnings or something, you can't immediately short it. You have to look at where's it gapping into, right? Just like if a stock gaps up into resistance, you don't immediately buy. So when you look at the context of where are we gapping into, after breaking out on good momentum, you're gapping back down to the old breakout area and the 20-day moving average. I mean, yeah, it didn't have to go up, but it makes sense. It makes sense that the buyers emerged and bought the dip. So if you forget the fact that this is a good example where if you look at the percentage change, you're like, Cisco down 3.8, you suck. But if you look at the candle, you're like, actually, I'm intrigued. It's gone up since the open.
And context again, I mean, on the cash open, what did the market do? It sold off.
Got whacked, yeah.
Fairly aggressive, it sold off. Yep. It tried to fight on that CPI report before the market opened, and then it got beat up on the cash open on the market. Well, yep. What did Cisco do? Cisco on the cash open actually responded from an intraday perspective, and it fought for intraday support. Yep. It found intraday support right there south of 46, and now you're fighting for a horizontal trigger above 46.76. So, yep. So to me, if Cisco's on your radar, and yeah, you're not doing anything. This is tackle trading. You're not buying Cisco a day before earnings, right? Yeah. Tackle trading doesn't do that. So if you're looking at Cisco and it's on your radar, and you're looking at this earnings report it had, and you're like, okay, slight overreaction. The market is showing you on the intraday it's a slight overreaction, and now you got a really good horizontal trigger that you could trigger above. Yeah. And if you need more evidence in that horizontal trigger, maybe you wait for the close to get above 46.66 and you trigger tomorrow above the high of that candle. And again, I just think Cisco should be on the radar because of the strength of the support and the movement coming back into the cash open. Now, I don't think you can target anything above the gap range on this. You got to just wait for it to clear the gap range. But I think that's a good little short-term trade.
It is, and if this was Disney or some big company that I want to own, this is the best thing you could have hoped for. Is for it to get stuffed back down. And you do wonder if it would have had this negative a response if it didn't.
I don't think it would have.
Crazy in the 3 days prior, right?
No, Tyler, I don't think it would have. I think you would have had a muted response. You had a mixed earnings report. You had a beat on EPS, a beat on revenue, and even in the growth areas of their business, the infrastructure platform and the application unit. I mean, it was mixed. Application unit beat, and infrastructure platform beat, and the application unit didn't. The concern here was the warning of supply headwinds. That's what the concern was. And that concern is the same concern we have in this entire space right now. That concern is not just relative to Cisco. It's concern in the entire space. And so, yeah, I do think you have a little bit of an overreaction to the downside on a lukewarm earnings report. And I don't believe you would not be waking up this morning if Cisco was fighting a breakout of 46 before the front running. You would have been doji on a mixed report fighting for that breakout. And that's why I think you got to be looking at it right now as a bullish retracement.
I agree.
All right. Next, let's move on to Lyft here. Okay, Lyft, on the other hand, they reported a loss, but that's what it does. They just didn't report as big of a loss, what everybody expected. Lyft comes out and they report earnings per share of a negative 58 cents. The expectation on Lyft was a negative 72 cents, so slight better than expected EPS number. Revenue came in slightly north of the expectation at 569.9 million. That represented a negative 44% decline in year over year. Lyft did talk about things getting more on track in the second half of the year. So they didn't increase guidance. They don't have guidance, but they did talk about how things are going to get better in the back half of this year. I've heard that story out of Lyft a long time. This to me is not a very good economic report or earnings report, in my opinion. To me, if you are looking at Lyft, you got to be patient and wait for something to set up here, because this is something that should have been sold, in my opinion.
Mhm.
Yeah,
I'm
100%
sorry.
agree.
At this stage in the recovery and in this stage in price, it can't. You can't be, oh, I didn't lose as much as I thought, and it can't be, oh, and we're going to get better than you thought we were going to be in the future. That can't be the analysis towards, hey, Lyft's going to go to the moon.
Well, it's gone from 20 bucks. It was almost at 60 today. And we're talking since November.
Yeah.
December, January, February. I mean, you're 3 months in and the thing's doubled, triple. Yeah, I agree. If it was 20 bucks, different story. Yeah.
Yeah. This to me honestly, I don't like their earnings report, and I don't like the fact that we're just saying that things are going to get better in the future.
Yeah.
Like just randomly, things are going to get better it's going to be sunnier sometime at some point. I don't think that's a good
They
thesis.
teach you that at CEO camp on the first
They
day.
They do. They teach you that at CEO camp. That's true. I went to that camp. It's a fascinating camp. All you got to do is tell people it's going to be better at some point.
That's right.
You just made me think of that song from Annie, "The Sun Will Come Out Tomorrow." I need Coach Mark here, like singing that right now.
The sun will come out. Yeah. I need him
Tomorrow.
here.
Bet your bottom dollar that tomorrow.
I don't think there's a technical read here, Tyler. I mean, you were overextended on before the event, and then you gapped up. This is one that just needs to be slowed down, settled down, and let's reassess in a week.
Does it make you hesitate on Uber here, or make you even more confident with Uber here? Let's say, because Uber's reporting, what is it, tomorrow? And we've had this huge run up, and they're even benefiting from this move here today.
Yeah, I can't wait for their gap up against a garbage report. Yeah, that's going to be fun.
They're dirty. They're dirty. They've been sexy. Yeah, but go ahead.
They're so filthy. It should be on Mark's top 100.
Fair enough. Fair enough. We'll get to analyze Uber's report and see if it's correlated to what Lyft had to say as well. But obviously, they were pointing, it's all about the future, man. And that was basically the takeaway. They were trying to get the market to buy into it. The market did buy into it, but at least for one day. So.
Yeah, on Uber, hey, good luck. And I could be completely wrong on Uber. Uber does report here today. But I'm sorry, a stock going from 47 to 63 on the backs of absolutely nothing, and they're going to report another loss. I'm sorry, I don't get too excited about that.
Yeah, I think it's fair. Gotta have some caution when they run these things into earnings. It's just what they've been doing lately. Yeah, front running. All right, what else we got here? GM, couple others.
Let's move on to let's go to GM. Let's go to GM here. GM came out, and GM's report was actually fairly decent from a raw numbers perspective, and EPS was actually really good on GM. EPS came in at 193 versus the expectation of 162. Revenue beat as well, 37.5 billion versus the expectation of 36.9 billion. GM's revenue increased year over year, 21.7%, guys. That's a really good number for a traditional car manufacturer like GM. The only problem here, and it was a fairly substantial problem, was they did lower guidance. And a little bit of the same warnings here on GM. Headwinds coming from a supply perspective. And so that they did account for that, and that's what's really kind of driving the downward movement in price. I think this is a little bit of a gift. A gap up here, I think, would have been a little bit difficult to trade. Gap ups kind of are a little bit difficult to trade. Take a look at that Cisco trade again. Why do we like it, the gap down? Because it's coming into support and it's still maintaining technical analysis, right? When you're taking a look at GM, you have a little bit of the same philosophy here. Now, obviously, we're not talking about a bullish retracement fighting for support, but what I think happened here, and I think it's going to be good coming into next week, is the fact that you maintain that breakout of 57. And so with what happened here, you were overextended coming into the earnings report. It was, in my opinion, a fairly decent earnings report outside of the lowered guidance due to the same headwinds that Cisco talked about and many others have talked about. But what we're seeing here is you haven't violated a support level, which means what you're most likely going to form here. And again, this is just probability analysis. It's not a guarantee. I don't have I don't have the crystal ball to know what GM's going to do. But given the fact that it is now fighting on that 20-day moving average with an increase in support against the bullish retracement, you're looking at that as a cup and handle at this point. And so you're just waiting for that continuation pattern type analysis. You're waiting for that support level to form, but what you're really waiting for all of this to occur on the bottom end right here between 52 and 55 is you're waiting for that to get consistent against the breakout of 57. And that's what you got to like here today. If you like GM before the report, there's nothing in the report to suggest you shouldn't like them, both in the short term and the long term. The short term technicals maintain that breakout of 57 is legitimate. Long term GM, there's nothing in this report to be like, yeah, I don't believe in GM. It was a good report.
Mm-hmm. Yeah. And I think the technicals, as they do set up, Matt, when we do catch a breakout, you can play that, correct? I mean, that's exactly what we'd be excited about. I'm watching that 57 level.
You know, James gives a wonderful point here, and it's the game that's played at that level that a lot of people are not familiar with. But James does. He says that's why Tesla keeps running and GM sucks wind. Elon gives these, and I even said that on Elon's earnings numbers. I said these raw numbers are garbage. Elon's got to work his NLP magic, and that's all about the future, man. That's all about the future. Whereas GM comes out today and GM says, you know what, we're doing really, really good, but we do have some concerns moving forward. I'm sorry, but I'm always gonna navigate to the individual that gives me the bad news.
Mm-hmm. Yeah.
I don't. Listen. We get sucked out on everything, like every trader does, right? We all have to make decisions for ourselves. But I don't want to be surprised when Tesla comes out in a year from now and says, oh, this, and this. I like the fact that GM CEO came out and said, you know what, we have headwinds coming at us, and these are things we're going to have to fight to overcome. At least as an investor, you know what you're in for. I do like that.
Mm-hmm.
I do like transparency. And I'm like, again, at this stage in the cycle, after this much price appreciation, at some point, we got to stop being like, well, it's all about the future. Well, we've been hearing that for 3 years. It's time to make that future a reality.
I think that's a very fair point as well. Okay. What else you got?
All right, let's move on to Coca-Cola here. KO. Coca-Cola, now obviously Coca-Cola is one of those boring dividend paying stocks that we love to write cover calls and never ever look at. Not exactly a swing trading company. So let's just take a look at it from an investor perspective. 47 cents a share versus the expectation of 41. Revenue came in slightly under the expectation, 8.6 billion versus the expectation of 8.7. Revenue did decline 5% year over year. On a company like Coca-Cola, nobody's looking to trade this. They're looking at, is there any problems here I need to be overtly concerned about? As of right now, there's no overt problems we need to be concerned about in Coca-Cola's reports. Nothing to see here, in my opinion, unless, Tyler, you see something different.
No, sir. You had me at Coca-Cola.
Yeah, well, Coca-Cola at the bottom of the chart. Like that, like doesn't everybody? Is that where Coca-Cola is now at, the AT&T stage, where it's like you never care about it until it's at the bottom of the chart? I mean, are they there?
I think so. You play it obviously just for the dividend type situation here. So
yep. Coca-Cola is officially there in the. You never look at the chart unless it's at the bottom, and then you look to acquire and just park cash.
A position style type trade, yeah.
Right, you just park cash.
Yeah.
Yep, love it. Let's take a look at Twitter here. Now, Twitter. All right, Twitter comes out and announces they came out 38 cents a share versus the expectation of 29. That's a good, healthy beat on EPS numbers. Revenue came in at 1.3 versus the 1.2. Again, a beat, slight beat, but a beat nonetheless against the revenue, and revenue did increase 28%. The one concern a lot of people had that invest in Twitter is the removal of Donald Trump from Twitter and how that was going to impact the Twitter, all things Twitter and the Twitter universe. And we don't know yet. We can just take what Jack Dorsey said, and what he said was it has had very little impact, and they've actually seen an increase. And so we'll see that storyline play out over time. But as of right now, Twitter investors are celebrating the positive EPS speed, and Dorsey saying the volatility of the removal of Donald Trump from the after the Capitol riots on January 6th hasn't had an impact on Twitter's usage so far.
Mm-hmm. Well, and obviously a little gap up here after moving for almost a month. I don't know what you do with this technically.
No, you don't do anything. Like literally, I'll save Tyler some air there. You don't do anything. There's no read there. There's
Right.
nothing to see here. It's one of those scenarios where, Twitter's not a great swing trading instrument, quite frankly, and it should be. It should be. Twitter's one of those ones where it should be a great swing.
Yeah, why
trading
not? Because I've always wondered
It's
that
just
for
not.
literally for years. It's like, why does Facebook set up swing patterns better than Twitter does? And Twitter
Facebook-
just doesn't have that,
Facebook has wonderful swing trading techniques to it.
Mhm.
Tesla has wonderful swing trading techniques to it. Twitter has garbage swing trading techniques. It has too much shakeout. It's too much random news. It has too much social conscious in it. It has too much subjective opinion in it. And again, when you look at the weekly chart, sometimes you're like, yeah, it's fairly consistent. Try trading it.
Yeah,
Try getting stopped out as much as you do, and then you'll never trade it short term. So again, it's just, there's nothing really to see here on Twitter. Let's see how the market's going to respond in the future. But again, for the investors out there, they're not worried based on what Twitter here reported. And then the last one, DSM candidate here, dirty sexy money candidate, CCJ, please. Okay, now CCJ is our uranium candidate for the Dirty Sexy Money list over there at Tackle Trading. And if you're not familiar with Dirty Sexy Money after last year's performance on Dirty Sexy Money, I would strongly recommend you get familiar with Dirty Sexy Money really, really, really quickly. And CCJ comes out today and they report 9 cents a share. They came out at 422. It's a micro cap or a mid cap company, so they're not going to have all the analyst expectations and whatnot. Overall, positive response. Technically, that breakout of 15 is now legitimate, and now you're looking at this technically saying, can we, the wide range candle and the overextended nature of it obviously leads to the same conversation we had on Twitter. With the wide range candle today, overextended, it's just a matter of letting it set up and letting it see how it wants to navigate this breakout here against that 15 handle that you recently had. So I would, if you're not involved in CCJ and you're looking at this, that weekly break of 15, you might not get a double bounce there at 15, but that's what I would personally be looking at to see if we can get a retest of 15 to see if we can test that weekly breakout. Because that weekly, if you look at the weekly chart here on CCJ, guys, I think it tells the story a little bit more than the daily chart does here.
Mhm.
You're looking at a potential above 15 that 20 is not out of the woodworks. Hell, 25 is not out of the woodworks here for CCJ.
Mm-hmm, mm-hmm. Yeah, I think from a longer term perspective, guys, if you're looking for cash flow candidates and all that kind of stuff, DSM list is something you absolutely need to dig into. And I've got interest here in CCJ. I was waiting for the earnings, so
everybody chases the dragon of dreams and whatnot. Zoom was a great candidate for us last year, right? We had a Yeti was a great candidate for us last year. But the simple reality is a lot of those stocks that were great DSM candidates last year, they just got overextended and fundamentals got out of whack. If you're looking for some of those up and coming flyers that have the potential to do something great like a Zoom last year did, man, DSM's one of those lists. I mean, we're hunting there for dirty sexy, right? We're hunting there. And so yeah, DSM has had a great start to the year, and CCJ has certainly helped it.
Yep, absolutely. All right. That's earnings roundup. Always appreciate you doing that, Maddie. And I know the team does as well out there. Let's a couple of different stock items that I had outside of earnings. Then I do want to get into some of Frank's charts at the very end of the show. Also, Tyler.
Speaking of DSM, Momo.
Oh, I had
Momo.
Almost looking
DSM. Good. We've been talking about that breakout of 14. It was legitimate. Now we're at 18. We're above the 200-day moving average for the first time in a long time. Momo, baby. CCJ. Let's go DSM, babe.
Momo's made a nice little trend develop here in the last month. There's no doubt about that. All right, a couple quick news items, Tyler, here. Match.com, MTCH. They bought a social media company out of South Korea that I had never heard of called Hyperconnect for $1.7 billion. Market liked it, and it is breaking out on a no-sell day. This one's interesting. We analyzed the earnings just a little bit ago. Now you got a news item that's creating some juice here. Any interest in that chart there, Tyler?
Look, this is a good looking chart. The tough thing is it's up almost 9% today. I'm a stickler. If I miss a breakout and it's $12 over resistance, I personally don't chase, but it's a great little long-term chart. I mean, all-time high. It's just too extended for me. But any kind of consolidation correction here, definitely looking for a bullish setup.
Mm-hmm. It's got it, that little triple top breakout. I know we're up 9%. I mean, Matt, I guess the only way you could play this would maybe be momentum here, bar by bar, unless you want to wait for something. What's your read on it, Matt?
What was the news?
Yeah, they bought a social media firm out of South Korea. The market liked it, created the news little pop, and it's just ran with literally a no-sell day. It's called Hyperconnect out of South Korea. They paid $1.7 billion. Like I said a minute ago, I had no idea who that was. I just watching this chart, and I'm like, okay, news has created a little rally here, a little pop, a little burst. Is there interest for you?
Well, yeah, there's always interest on a breakout, especially after a month and a half, 2 months of consolidation. I mean, that weekly chart's going to look a heck of a lot better than that daily chart will. The daily chart is very overextended on the news, and then the news breaks out. I think you got to, it's very similar to an earnings situation where you have an overextended breakout, news comes out, breaks out. The only way to play that is momentum at that point. When you're overextended coming into a potential breakout and you're looking and now you're catching it, it wasn't on your radar before the breakout. It wasn't on your radar before the news, and you're catching it today on the news. And now you're at 173 when the breakout was 160.
That's tough.
That's tough.
That's real tough.
That's real tough. The only way to trade that is momentum style. And so when you hear the word momentum style, you're talking about something that doesn't fit standard swing trading techniques, right? And when you do that, you have to drop it down exactly what Tyler just did. You have to drop it down into an intraday time frame to map out your trade. And if you can still get a decent trade, then you can bar by bar that momentum. Absolutely. But even with the intraday analysis, you're triggering above 173.54, and the only legitimate stop loss you can place is underneath 165 here. And so it's still going to be a tough trade. I think it's better to you may miss it, and you know that, but I think it's better to give it a day and see what happens.
Give it some time to chill and see what happens.
And a lot of that is based on the intraday.
Mm-hmm.
The intraday just isn't setting up.
Mm-hmm, mm-hmm. And it might take off. It might run from you. You don't know that, right? You may not get your entry.
I
right?
like the news. I think it's positive news, and I'd like to look into the news. But again, when something's not on your radar before news, threatening a breakout, and then it gets on your radar, you're not just going to go chase it just because everybody else did.
Mm-hmm.
Do your research, do your work, and if it's still a good trade it momentum style. But from a swing trade perspective, no, there's no system out there that would say let's map out a trade after the market went from 130 to 170.
Mm-hmm.
Like that doesn't exist in a swing
Mm-hmm.
trade. So no, you got a momentum trade in. The analysis doesn't fit. You're trying to fit a square peg into a round hole here.
And I'm gonna bring up a second chart that fits this same conversation. Bring up Baidu. Along the same kind of lines. You want to talk about crazy momentum here? Look at what this company's done the last 3 months, and it's just had all these positive news stories developing around it. They're moving into EV vehicles. That came out back in November. We talked about it on the halftime show. It's been developing a nice trend with good entry points, by the way, over time. We've had 2 good retracements, even breakouts developing in here. There's no entry today, but you want to talk about front running into earnings, guys. This thing ran from 230 to 320, and the news today here is that they're looking to raise money for a standalone artificial intelligence semiconductor company that they're going to run in their own company. So Matt, now they're moving into artificial intelligence and semiconductors and electric vehicles. And Baidu seems like they're moving into every hot fad out there in the marketplace. And the stock has just absolutely gone gangbusters. I don't even know if there's analysis here, by the way. I just find it interesting, this company.
My brain is stuck on the market cap of the stock market versus the economic market cap, and I can't like, I'm trying to add these two up and they don't make sense. Like it just, when I'm looking at Baidu, it just makes me think every company is going to be the #1 company in the world. Like, it's just crazy. It's just crazy.
Guys, I remember a time when Baidu was tradable, and then I remember a long period where it wasn't.
Well, but even in this parabolic move up on Baidu, there were multiple swing trading triggers there. I wouldn't have the same analysis on Baidu that I do say at Twitter. I think Baidu it can be and has historically been a fairly decent swing trading stock. And so it had a couple years there of just net neutrality where it would just kind of did what it did. But you have a pretty good trend here. And yeah, I do have a Twitter take on that in the current price action in the last like 3 weeks. But I still think you can wait for a proper setup on Baidu and trigger. It's just overextended. You wait for a high base, you wait for some type of consolidation, wait for a flag, wait for a deeper retracement. You don't chase it. But I still think Baidu it can be a wonderful tradable instrument.
Yeah, I think it's getting back to that tradable instrument status, from it's just also price is incredible. Sometimes don't you just catch yourself staring at some of these charts lately, Tyler?
Yeah, sometimes I just wish I just would have bought everything, put all the money in the world in Baidu at 100.
Can't live in the past. Cannot.
I get it. You got to make decisions for now, but it's like, wow, that is impressive post-election.
All right. Let's get into a little section we do on most Wednesdays, actually, where Frank, from our Tackle Trading Twitter, Coach Frank, Breakout Frank, who comes on our Friday show, very popular coach over here at Tackle Trading. He sends us a list of charts he's been watching and posting on his Twitter feed at Tackle Trading for that Twitter account. And we're going to go through them. Going to play a little game here. Mark, I see you pop in. I'm going to bring you in as well for any analysis. And maybe we'll just kind of go around the room. Not everybody on every chart, but we'll just kind of take turns on these. I'm going to start with our guest, Tyler, an ANF pullback to 20. ANF pullback to 20. One of Frank's charts. What are you seeing here, Ty?
Clean. Yeah, pull back to the 20-day moving average there. I like this. This is a pretty setup. You got a nice hammer candle today. It's clean. It's clean. I mean, it made a higher pivot high. Volume pattern's fine. I got nothing bad to say about Abercrombie and Fitch.
Are you sure you couldn't find something bad to say about Abercrombie?
Well, they did release that. They used to have a magazine. It had all naked people, and I was wondering how that marketed their clothing.
That was funny. I like it too. I like it technically here. Not a company I track very much, but just from a pure technical perspective, you got a little bit of a slowing momentum pattern on the pivot here, so that's a little concerning. You might wait for additional confirmation there, or maybe pick a more conservative strategy, I would say. But you got to like the pivot formation of the higher high, higher low. You got to like the bounce off the 20-day moving average right now. You got to like the hammer candle inside the preceding candle, which would be a bullish Harami type candlestick formation to a certain extent. So you got to like the pattern here. You just don't love the momentum. And so, yeah, I would say it's a good pick. It's a good little bull flag off the 20. And of course, horizontal resistance.
Yeah, of course, Tyler likes it. He is the tackle trading coach most likely to be an Abercrombie model.
I don't know about that. I don't know about that. Coach Marquise could easily fit that bill.
That's true.
That is true.
Like, what are we talking about here?
Yeah.
Marquise works out every day. So
Marquise just threw his dumbbell through a window
he
somewhere.
did. He did. All right. I'm going to go to a momentum. Well, not a momentum play, but a breakout potential play here. And
By the way, I got Marquise coming on Trade Masters, not tonight, but very soon, maybe next week or the week after.
that will be fantastic. Can't wait to get Coach
his
Marquise on
his
there.
first attempt going into the jungle.
Oh, I got no worries for him. You know, that kid knows
I'm playing
how to trade,
Welcome
so.
to the Jungle, and you're not going to stop me on.
Well, Google might.
Okay.
That's a different conversation.
Okay.
Yeah, it's just what it is. All right, next one, Baba. I'm gonna throw this one to Matt. You actually, I like this one for your analysis. Baba, Coach Frank says breakout above 270 on Baba.
Break above 270, he says. Does he?
He does.
Listen, I am not one to question Frank's breakout analysis because he is Breakout Frank for a reason. I kind of feel this is a little bit of a weaker candidate than Tyler's should have been winning candidate from last week. Now that Mark is here, Zoom had a little bit, and again, I'm not saying they're 100% the same, but you know, that analysis of the deeper pullback, the inverted head and shoulders, the horizontal trigger, you know, the only difference in the pattern is Baba's was weaker than Zoom. Zoom, you know, held that 200, stayed above the 200-day moving average, whereas the pullback on, you know, Baba took it underneath that 200-day moving average. But I do think that head and shoulders formation reversal pattern with the clean trigger above 400 on Zoom is a fairly similar pattern that you're seeing here develop on Baba. And we know the strength of what, you know, we just talked about Baidu, and Baba can run like Baidu does. Now, I'm not saying it's going to, but you got to like the analysis coming into this potential breakout. And so, Tyler, do you got a similar read on Baba as you did last week on Zoom? And again, I do believe Zoom's stronger. I mean, Zoom's front running Baba here, but a little bit of a similar inverted head and shoulders, horizontal trigger. Yeah. What do you think?
Yeah, I think the hard thing with Baba is just that it's been so gappy, and you've kind of had some negative news hanging over it. So maybe the trust factor is a little bit lower than Zoom, which had a pretty clean pattern. But emerging markets has been hot. Chinese stocks have been hot. If this thing goes any higher, it's going to break out, and it does have room to run. So it's okay. It's okay. I mean, I see it, and I wouldn't mind a breakout. Yeah.
Can I sign you up for a 270 by 300 bull call spread?
Yeah. You know, and the other thing too is this isn't near as extended as some of the other guys, right?
No.
So that's one of the things that this has working to its advantage.
It can pop, and you know, I like that 270 by 250. Yeah, 270 by 300 bull put spread. I think it reduces your capital pretty good there. Yeah. It's a good way to maybe risk adverse a little bit, right?
Yeah, bull calls are good. Yep.
So I do like a bull call here. I think it works out.
Yep, makes sense to me. All right, next one. I'm going to go to Mark on this one. PHM. And Marky, I think this chart I'm interested in your take on it. Very, very long consolidation. Obviously, it's going to be that way on the weekly as well. Coach Frank has it as breakout above 50. Also kind of a round number there that trades would be significant for. Mark, what's your read here on Pulte?
I mean, it ran up pretty hard into the break, which is the only negative thing I can say about it. I mean, it's a clean trigger, multi-month consolidation. I would love it to take 3-4 days, you know, always get what you want. If it consolidated a little bit, gave those short-term moving averages a chance to catch up. I mean, it's a clean break, multi-month consolidation I usually like. I just wish the only negative thing I can say is the speed of the run-up into the break.
Anybody want to add anything to that? I agree.
I do. I have things to add to that one. And I know sometimes you guys hate it when I do cross comparison top down approach when you guys are just going through picks, but I do think it's important when you're talking about a company like Pulte, when those housing stocks trade very similar to one another. And so a lot of times when one starts to outperform, underperform, you see leadership start to go in that area. And so when you're talking about Pulte, I automatically want to take a look at XHB. And if Pulte is not as good as XHB, it's a no. And that's where you start.
And it is not.
And it's a no.
Mhm.
It's not as strong as the sector, and the breakout, it's been, you know, that breakout has ran into that breakout. I could see a fake out happening there. I just think the sector is really, really consistent. The sector is really, really strong. Pulte could be breaking out, but again, if Pulte breaks out, it's like the home builders are going to do better than Pulte. And so in my opinion, you know, and again, this is just my opinion, and Tyler hates it when I do this, when I look at against, you know, industries, but you kind of play the would you rather game. Would you rather take the breakout of 83 on DHI? No, that's a yes.
Yeah, but what about Toll Brothers?
No, I'm not doing Toll Brothers yet. I'm doing DHI. Is
All right.
DHI a yes or no? Would you rather take DHI over Pulte?
Tyler?
Yeah.
Yeah, that's not a hard one. You got an increasing momentum with a high base trigger. That's an easy one. What about KB Homes? The trigger above 45 on KBH.
I like that better than Pulte as well. Yeah.
Yeah, I like the KB Homes better. What about Lennar above 95 LEN?
What did I do? There we go. Yeah. Yeah. I
Pattern.
want to see a couple more bars, but yeah.
Yeah, a couple more bars, but that trend and pattern is very consistent there.
Yeah.
And I can go on, right? I can go on here. So when I'm looking at this area and I'm saying, okay, which one? And yes, I would rather have Toll Brothers there as well. But out of this space, and I've done a lot of research on this space because I always have a home builder on the Tackle 25. And every year I give Pulte a chance. Every year. And every year it comes in 5th out of 5. Every year. Every single year. It always starts with Toll Brothers and DH Horton. Always. And I honestly try to replace it sometimes. It just can't. So if the sector's doing better and the sector's in a better pattern, then you know the individual components of that sector are in or that industry, because we're talking about the industry, are in a better pattern too. Yeah, so here's reality. If that Pulte trade works out, the other ones are all going to work out and most likely better.
I think it's a fair point for top-down analysis and a good exercise as well. All right, very good. Let's go to the next one here. Ally, A-L-L-Y. And I'm going to start with Tyler on this one. Interesting. Coach Frank just has a breakout above 42. It's hit there at several different points. I actually think it's got a pretty clear entry point, obviously, just above that pivot. Tyler, breakout at 42 on Ally.
Yeah. I've used Ally Bank before, and they got a slick app. So I like their product. I think you could even do a flag here if you wanted to take a quicker entry in anticipation of the breakout. But it's clean. Finance has been strong. I like the sector, which, you know, Matt might take his hammer and slam it over Ally and find a better pick. I don't know, but
see, he hates it when I do it. He hates it. I'm sorry, you can't get the top-down approach out of me. I'm a top-down analyst. That's who I am.
No, I don't hate it because it's wrong or bad. In fact, it's a very good practice. It would simply be because then for somebody to bring a pick to you, they have to have done 10 times the work. Because if they picked Ally, then you have to say, well, go look at every other financial stock.
I do like bringing your guys' analysis up. I do.
Yeah. No, but Ally by itself.
I'm not saying anything negative on Ally, by the way. So go.
Yeah, it looks good. It looks good. The flag's good. The breakout's good. Every other breakout and dip has been a buy since March. I see no reason why you would bet against that.
Well, and fintech. I mean, we know the strength of fintech out there, and Ally is part of that strength in fintech. And you know, you got an interesting little candidate here that you could be patient and just wait for the breakout because you got the analysis waiting for the breakout, and it would be a really good breakout.
Yep.
I think you got the flag to front run that breakout though.
Well, and that's the thing is if it comes down enough from the resistance zone, then it's like if you're gonna take the breakout, do you want to front run it? Yeah, and I'm with you. If it's a strong stock, strong sector, and I wanted to buy it anyways, I'm inclined to do something on the dip. And you could always split the difference and do half and half too, right?
Well, and what I like and it's weird, but what I kind of like that's setting up on Ally here, if you go to the 30-minute chart there, here's what I like, and draw me a trend line of resistance on that 30-minute chart. Okay, and
You want it?
No. I want that one. Yep, you drew the first one. I like the fact that we're breaking out of that range, that little 30-minute range there. And then the last hour or so, it played defense, forming a pretty good trigger above that daily high.
Yep.
And so if you are going to be aggressive here, and this is, I think this is an important point, just if you're talking about front running and the front running a potential breakout. And Tyler, before I go deeper into my analysis here on Ally, can you just explain what front running a breakout is?
Yeah.
Yeah.
Essentially, you're buying in anticipation of a breakout, and
yeah,
so
you don't want to wake up and have it be up 4%, right?
Correct. Yeah.
Yeah.
So the upside is you avoid that scenario where the next morning it's up 4%. And you're like, well, okay, I missed it. I should have bought it yesterday. The drawback is you have a little less confirmation. So you're giving up some confirmation to get a better price.
Agreed. And typically, like I go back and forth on it, right? Like every trader does. We always go. Sometimes I like confirmation, like a close, and sometimes I don't. Right? It is a subjective analysis, but what gives me confidence in making the decision to front run, or versus wait for additional confirmation, is patterns that develop before the breakout. And when you're looking at Ally here today. And yes, you are overextended coming into a potential breakout to a small extent. You ran from 37 all the way to 42. Mm-hmm. But when you look at the last 3 days of that short-term consolidation, you got a bullish flag-based pattern with confirmation right now in front of that $42 breakout. I think you got the intraday analysis with the technical trigger in front of that breakout to justify taking the risk that we don't break out and resistance holds. I just think having that analysis going into it, it helps you make a decision whether or not you want to be aggressive here and front run, whether you want to be a little bit more conservative and wait for that additional confirmation on Ally. And I don't think anybody would fault anybody for waiting, and I don't think people should fault for front running here, because I do think you got the analysis to pick.
Agreed.
Mm-hmm. I love that breakdown, that analysis. I think it's very, very helpful. And the flag, the breakout, there's a lot in there that you can map some potential trades around. All right, guys. I mean, I've got several more. Let me throw this out to you. You want a bear? Do you want a weekly 9 EMA, or do you want?
I want a bear.
I know I had to.
Oh my goodness!
I got 2 bear candidates.
Listen. Okay, we're in a bubble. Okay, we all know that, right?
Yes.
Like this isn't debatable at this point. We're in the 1999 bubble. We just don't know if we're in the 2000 or in the 98 part of that, right? We're fundamentally in a bubble at this point. This is just crazy train analysis. So yeah, I get it. Bears will come back at one point.
Poor Frank. Poor Frank just loves charts.
Bears are going to have their day. There's no doubt about that. And I personally look forward to an opportunity to short a lot of these god-awful companies that are not this valuable. I look forward to that opportunity. And I think a lot of money is going to be made in that moment in time. That moment in time is not right now.
I'll short when J-Pal gives me permission to short.
And when J-Pal gives you permission is when J-Pal raises interest rates.
How you doing, guys? How's it going out there?
What's up,
What's
Gino?
up, Gino? What's
Oh,
up,
not
Gino?
much, man.
But no, I kid. I just wanted to do a little bear stuff there. Let's take a look at the bear trade here.
All right. Let's see. All right.
You got to make fun a little bit of the bears, right?
We all know. Tyler
yeah.
Tyler comments it every week at our scouting report meeting as well. International paper, just a bear retracement. Looks like a little kiss goodbye pattern developing here as well. I'm gonna start with Tyler.
I'll put aside my natural aversion to bears for a second and analyze this of its own merit. It is a low risk pattern. I mean, if it works, you got a decent reward if you have another downswing. If it doesn't, you can get out quick. Today's candle is a good example of why these are so hard. Technically, this triggered today if you were using prior day's low. Let's see. No, I stand corrected. It did not. Okay, my point is invalid. Never mind. Yeah,
it was going to be a wonderful point though, Tyler.
What? Pretend like it triggered today and then it went right back up. That's my point.
I get it. Everybody sees it. Yeah, but do you dare?
Yes, Tim. If it takes out the low of the last 2 days and pivots, it could be a bear retracement. There is old resistance, old support, which could become resistance in this area. Yeah, I mean, and this has made some lower highs and lower lows. You could map it out.
You're so excited. I can tell. I get it, guys. It's tough, thinking about
let
the
me
bear
guess.
side of the
Tyler
market,
is
but-
not going to take that trade. Let me guess.
Okay, hold on.
Nope.
Bear retracements are not a viable pattern at this point. Not
As
yet.
soon as I start to get jealous from other people making money from bear retracements, that's when I will start.
That's when it is.
Mhm.
Okay. When we see one market bearish retracement work, at that point it's go time. One.
Yeah.
Just one.
Even
But the whole trend has to change. Like,
Okay,
we have to
wait,
break
hold on.
support.
If we see one time where the buy the dip doesn't work, then we can talk bear strategies. Just one time.
That's true.
Because that's all it will take. Just one time.
Yep.
But that time is not today. So I'm a no on IP.
No as well.
Maybe I just could have said I'm a no.
I don't know. Listen, the bear side of the market has not exactly been fruitful recently. We've been trading.
No, the only thing bears do is they don't buy. That's the new bear. They're just not buying the underbelly of the market. We're all bearish because we're not participating in the bubble.
All right. Let's finish on an uptrend and a bull one and a momentum one. Then, Mark, I'll give you either Marvel Technologies at the weekly 9 or Penn on a bullish retracement. Which
Give
one
me
you want,
that
Mark?
Marvel at the weekly 9.
MRVL. I thought the weekly 9 might grab Mark's attention here. Frank says trying to doji above the weekly 9. I think we got to start with the weekly chart here. Mark, what do you think?
I love how Tyler has a setting literally called Mark's chart.
Mark, hang on.
Give me that weekly chart.
I know. All right.
Marvel, tackle 25 stock.
Man, pullbacks in this run to the weekly 9 have been decent. They haven't been perfect though. Man, I would like a deeper pullback to the 20.
Mark saw a bull on the model and overreacted.
Yeah. He saw a couple times where the 9 didn't clip to the exact penny, and he's like, okay, now I might need something different. Anybody else? Let's go with Tyler. I'm gonna go you. I'll get Matt last and Gino.
On Marvel?
Yeah.
Well, so I would start on the weekly to qualify or to spot the pattern, but then I got to see how clean is it on the daily.
Yeah.
And the thing is look, if it takes out that 20-day moving average and this little mini pivot and turns higher, you could make the case that it's a buy. Yeah, I don't mind it. This is not a garden variety. I don't know. I guess as I'm looking too back at MRVL, I'm like, kind of a position trading stock for me.
It's a good company. Yeah, for sure.
It is a fundamentally great company. It's a very liquid option company. You can write a lot of covered calls, and in the tackle 25, sometimes you got to know when to write, and sometimes you got to know when to let go. And it's those moments in Marvel where you're writing calls.
Yeah.
Right, and that's what you're doing. and you're just saying, okay, am I writing the 55 or am I writing something above 55? So you don't want to be, but no, I don't think you're looking at, unless you're looking at, hey, I'm talking about investing in Marvel and doing cover calls. That's a different conversation. But what Coach Frank is talking about is swing trading here. And I think there's better candidates, number one, and number two, Marvel's in the, hey, let's write covered calls and see how it navigates this short-term neutrality.
All right. I can't leave Coach Frank on a chart where nobody likes it yet. Although we love the company, maybe position trading and all that kind of stuff.
The first two we liked of Frank's.
But we got to end on a high note. I think we got one here. Penn, National Gaming, PENN, momentum play, bullish retracement developing post earnings. Let's go, Matt.
You're into the level of analysis right now where you need a doji. And whenever you're talking about that concept of need a doji, you're sitting at support in a bullish uptrend, or you're sitting at resistance in a bearish downtrend. You're looking at it from a bullish retracement perspective. And right now you're looking at that first level of support, which is the momentum support level, and that's your 9 EMA, and it's trying to fight for the 9 EMA. Right now it's holding. Again, you still have a pretty big downward movement in price after the cash open. Let's see if it can hold there throughout the rest of the day. To me, at this point, it's a tough trade today, given the downward movement in price. And I guarantee Frank would say that as well here today. And Frank would tell you, get it on the radar, see how it navigates between the rising 20 and the rising 9. Look at the old resistance at 111.5, see how it tests that level. All of that means we love that support zone. That's what it means. It means we love that support zone. But simply because you love support doesn't mean the market does. You got to let the market show you. And the market tips its hand through slowing momentum. You first identify slowing momentum on the intraday chart. So if you'll drop that down into a 30-minute chart, 15-minute chart, whatever your favorite time frame is, that's where you first see the slowing momentum. And right now, I'm not seeing it yet. And a lot of that is based on the gap up today and the sell-off from the intraday perspective. I'm seeing very similar momentum in your downward movements in price. And so we have yet to see that momentum slow down. We are now getting into the areas of support where you typically do see that momentum slow down though. And so because you're coming into support, we do expect momentum to shift here, but you got to see it on the chart. And so, yeah, Penn's on the radar. You're looking at Penn, but to me, and again, Penn's one of those companies that we could wake up tomorrow and it's above 130 and triggering, and everybody's like, oh, we should have just bought the BFTD, right? Well, that's fine. You can do that. You know, I mean, it has worked in the market. But if you are the type of trader that does appreciate technical analysis, which should be everybody, you're going to wait for a doji and you're going to wait for the intraday analysis to set up, and then you're going to trigger.
I agree on all of that. I mean, once you get that intraday level to come back in and start to develop and show you clear triggers, you could probably map out a swing trade. It's been a momentum juggernaut, no doubt about it.
And you're in that zone on the chart. You're literally in that zone where all of that starts to happen. Just let's see it a little bit. That's all I'm saying. Just let it form on the intraday.
Yeah. All right. Here we are, guys. You know, going to wrap up the show here in the next few minutes. We got Coach Gino popping in, and whenever Gino pops in, I got to give him the floor for at least a couple minutes. You know, what's on your mind, my friend? How are you? What you focus on in the market?
Oh, you know, I'm doing good. I love this market. And yeah, everything Matt said right there was perfect. Is wait for a setup. You got the trends are in place still. Nothing's breaking down, you know, but wait for a setup. You can't jump into the market every day just because the stock's bullish. It's been the last few days been managing stops mostly and waiting for better setups to enter. Just had to go in there. Matt, thank you for the advice, guys, yesterday on MJ. Just had to put that one back in there. I love having a momentum player take off in your account. And like I said, Reddit started talking about the pot stocks, and look what they're doing today again.
See, Tim, that's how you say thank you when you get some help on a management decision.
Oh, really? Oh,
yeah,
right.
Tim's like Tim's like, do a cover call, man. Take profit. Short this thing.
No. Tim earlier today is like, Yeah, you know what? I made the right decision yesterday, and I'm like,
You're not even saying what I said.
I'm like,
Eyewitness testimony is terrible.
Gino comes in, is like, hey man, thanks for the analysis on MJ. It really gave me the confidence to stay in the trade. Tim's like, yeah, it's all me, baby.
Yeah, I couldn't sleep overnight, dude.
Yeah.
You know?
Yeah, I'm sure. I'm sure you were tossing and turning all night about your ETF that tripled in a month. Yeah,
there's some
there's some other jokes.
I'm sure Gino. I had a few jokes.
Finally takes off after 3 years, and now I'm all excited.
Yeah,
you should be, Gino. But no, I mean, Gino, what in your opinion, what's happening here on MJ, on what's going on with the momentum in the wheat stocks? I mean,
I was hunting around for the next Reddit target, and the GameStop thing fizzled out. Then they were trying to boost up Bitcoin. What it is you got a crowd of people, which is a powerful crowd. Look what they did to GameStop and AMC.
Very much so.
I mean, Reddit's a powerful entity, man. I mean, it's kind of like better than any prospectus I've read, right? People go to Reddit before they go to prospectus, which is kind of odd, but that's the truth, right? When's the last time you read
It's true. It's true. I'm willing to bet most people don't even know what a prospectus is. So
yeah, and first two sentence ins, you're like, I'm not going to vote. You throw it away, right? So anyway, I see how they're hunting around for the short squeeze. The brokers fixed that with the margins. Then they started hunting around for penny stocks, and then the Bitcoin. They're looking for the momentum play that's going to go through the roof. So something clicked in everybody's head and mine. What recently did that? 5G's got some fuel. It's still doing good, but it was the pot stocks from years ago, right?
Yeah.
So again, they started focusing in on that, throwing Elon Musk a couple of tweets, and boom. That's their target right now. What's their next target? So with that said, momentum stocks, because I am probably say scarred, tarred, and feathered from 2000.
You have some
crash.
Yeah, you got some .com scars there, brother.
Nobody's been ran over by momentum stocks more than me. And what that means is you wake up every morning and you go, yes, this is awesome. I'm the next superhero, and everything's just bright, sunny days, this is great. But then all of a sudden you wake up and go, what do I do about this 40, 50% pullback? What do I do about this 80%? And that's the questions, Matt, you're going to get in a couple of weeks, days. Right. Is what do we do now that I watched it disappear?
I do think it's difficult to spot when these things are over.
Yeah.
Right. I mean, that's difficult to spot. And I do think there is some of that Reddit crowd in the last week that has been pumping up the marijuana stocks. I do think that.
Oh, big time.
But these marijuana stocks started turning around in November based on the traditional Democrats in charge, legalize the marijuana, nationalize it. We've seen that storyline play out times in the last 7-8 years.
Well, that's why I did the ETF. I did the ETF because like Tilray still has zero earnings. They're not profitable. Do they belong up at $70? Well, just like all the other GameStops and AMC companies that have no earnings. No.
Do you have any concern though in the last week that, because yesterday I thought it was easy. You had a basically a no sell day, and it was like you take the momentum. Today's a little bit of a mixed bag. Yeah, you gapped up on the cash open, but then you sold off fairly aggressively. It's got a lot of volatility to it. And I do think it's difficult to spot when that Reddit crowd moves on to that next tradable instrument.
Right. So there's a new.
I mean, guys. Well, very quickly, take a look at GameStop very quickly. The GameStop momentum was amazing, right?
Did you see how fast it dropped? Do you see how?
But once it dropped like a rock. And guys, I mean, here's it needs to be said. When that Reddit crowd gets involved, these things are going to happen.
No, let me.
I mean, they just are.
Here. Let me speak from experience here real quick, Matt.
Yeah.
That graph right there, believe it or not, there are probably more people still holding on to that stock thinking it's going to go back up to where it was.
Oh, there's a lot of back holders.
Believe it or not, there are, because I was one of those guys that watched 88% of the NASDAQ go bankrupt. And I watched most of my portfolio go from hundreds of dollars a share, like Juniper Networks, Lucent. I watched it go down to $2.
Broadcom.
JDSU. AOL.com, right? And I watched it go down from like $1,000 a share down to $2. But deep inside, I thought, you know what? This could pop up tomorrow. I'm not going to sell it.
Mm-hmm.
So right now, I know the pain going through people's heads right now going, oh man, I wish I sold it when it was in the hundreds at 500. Well, I have nothing to lose now. It could pop back up. Here's the thing though, guys. I was talking about Old Money Homes last night on the show, which is a great show at the Coaches Show, guys. It was phenomenal. We were talking Old Money Homes. He's a value investor, right? That's where you look at stocks that actually have value, have earnings, and have a reason to be at the price they're at. Dividend payers, those are value. You can actually go, this is a good company. They make money. Then you got growth stocks where they have high sales, but they're reinvesting it. So they don't really have profit, but they're growing. And we're seeing that huge this year. I think this is a record year so far for Russell. I mean, we're up 16%. That's blowing away that's blowing away every other index out there, the Russell. And those are your typical growth stocks. It's called the Russell 2000 Small Cap Growth Index for a reason. And then you have these guys. What are these? Sentiment stocks. These are sentiment stocks, emotional stocks. Things are going to get better. These companies are going to go up in price for no rhyme or no reason. So bottom line, put a stop loss in there and lock it in. If this thing pulls back, take your profit, be happy with what you got and don't watch it disappear.
The reason I want to bring up GameStop is, GameStop had a little bit of momentum start to build. And then it had one candle, if you'll go back to GameStop very quickly, it had that one candle where you had the no sell day right before that candle, Tyler, you had the no sell day, right? And it was just the euphoria was building, the momentum was building. And then that gap up and everything went just crazy train, crazy train. And it went volatile and it became a difficult read at that point. Whereas when you're looking at, MJ or Tilray or what's happening in the marijuana movement, yesterday I felt it was fairly easy to say hold. I really did. You had a no sell day. You had a lot of momentum behind it. Volume supported it. I do think it was an easy call yesterday, quite frankly. I don't think it's an easy call here today. I think you got a lot of mixed reaction. You got a lot of, because we're at this stage where like none of this makes sense, guys. Like if marijuana was legal today across the entire US, you would justify the fundamental value. Like literally, there's no fundamental at this high in the chart. There's no fundamental justification for that. And now at this point, it truly is just momentum. And you have to identify when that momentum is over. And that is very, very difficult, both from a technical perspective, but like Gino is talking about, more from an emotional perspective, Gino, because you get emotionally tied because of the gains or the losses happen so quickly. They don't happen over time. They happen so quickly. You get so emotionally tied to the trade that it's like, oh man, if it goes down, it's got to go back up. No, it doesn't. No, it doesn't. You got to identify when momentum's over. And I'm not saying it's over today. I'm saying you got mixed analysis today, and it's making it very difficult. I wouldn't have fault anybody for taking in some profit here today.
Mm-hmm. Mm-hmm. Yeah, and the momentum thing is real. I'm still thinking about the conversation you two are having right now about, the Reddit crowd and the kids and all that kind of stuff. I don't have the conclusion that it's all these kids driving these companies, by the way.
No,
I think it's Wall Street driving these companies.
Hold on. That's, again, when I say the Reddit crowd, you're right, the Reddit crowd. But who's going to turn their algorithms on there?
They're co-opting it. That's
Wall
exactly
Street
right.
is going to co-opt it. And so it starts with the Reddit crowd. But if you don't think Wall Street has people on those forums every second of every day.
I read an article that the amount of resources that they are putting into algorithms to read the Reddit forums now, they're putting more and more resources.
Oh,
every
it's
day.
massive.
And so message board monitoring is something that more and more big companies are going to get down to an art form.
Yeah, I think so as well. Yeah. Good discussion, guys.
So
I think it's really interesting.
It's not just when they hold the bag, it's when those algorithms turn over. And so I just think you do have a little bit of a mixed data here today. Obviously, the market is still bullish, but the volatility is starting to get mixed a little bit.
Yeah. So all you can do on momentum stocks is when you get a breakout like this is what you're searching for, right? Trail it with the stop loss, and hopefully you get a good price when you get filled, when you get stopped out. Because momentum stocks, they're above all the moving averages. They're outside the Bollinger Bands. They're all overstrung. There is no technical read. Very hard. And there is no fundamental read. It's all about, hey, name your price and get out.
Yeah. Gregory makes a wonderful point there in chat, guys. There is no technical read, but there is a technical resistance zone that needs to be identified here. And that could play a role in where this momentum does stop. If you'll take a look at the weekly chart on MJ, you'll start to notice it's getting into that 35 to 37.40 zone. And there's some major resistance levels up there. And that certainly could play a role.
Yeah, that would be interesting.
That's a wonderful point there, Gregory.
Yeah.
Tyler, final thoughts from you, sir.
I should have bought pot.
Not too late, Tyler. Jump in, buddy. I need that candle to go up.
No chance at this point. Congratulations. No, I think
short those.
I think I'll end with I have almost pulled the S&P back green for you. So
it's almost in the green.
You're welcome. You're welcome. Good to be here today. It was fun.
Marky, you got events tonight, I believe.
Yeah, my final thought is got a couple events tonight. Tyler's going to be coaching the bear market survival guide tonight, 8:30 Eastern, for bear market enthusiasts. And my favorite show, other than my Sunday prep class, which I love my Sunday, that's my favorite. But Trade Masters is so fun, and it has made me money. And you know that Baidu chart that's way up there now, when it was way down low, it was a pick on Trade Masters. It was a pick on Trade Masters on one of our first Trade Master shows 7 weeks ago. Amazing picks on Trade Masters every week. Two coaches go to head. It is fun. You laugh, or sometimes you don't laugh at the jokes, but even that makes you laugh. And just amazing picks. I get my notepad out every week. I take a lot of these trades, and it's made me money. And it's a lot of fun to do it. So look forward to that tonight.
7:00 Eastern. Coach Mark will be, judging and kind of running the show. And come and join us, guys. Those of you who are veterans of, this community and whatnot, you've been showing up here the last couple of months for it. We love seeing the attendance. Come and have some fun tonight. Matt, final thoughts from you, sir.
A little bit of a slowing momentum day in the market. Let's see how this market navigates the last 2 days coming into the week. We were expecting the momentum to shift a little bit this week. And so far, so good. We've seen the momentum shift, but it hasn't shifted to the bear side, just more to the consolidation side. Let's let the market navigate the next 2 days. But again, there's nothing surprising so far this week.
Yeah,
the market's playing how it should play.
Yeah, I think so as well.
Outside the underbelly, some of the underbelly. I mean, that's taken a life of its own in the broad market, is what I'm talking about.
I think Chair Powell is speaking today, right?
He's going to talk about how low inflation is going to be here for the rest of our lives, and we don't have to worry about
and how ever. All asset prices are justified because it's the equity risk premium that you get because bonds are so low. So get ready for this one too. It really doesn't matter how much money we borrow right now because we can always pay for that money in the future. Hey, it is going to be J Powell greatest hits today.
Yeah. We're gonna have some fun ones with J Powell later.
We'll get the one line.
Somebody has the audacity, because somebody asked him the last time he spoke about GameStop. If somebody says, are you all concerned? Now it's pot stocks running. He'd be like, well, I love seeing him
This
stutter.
just shows the healthy market is coming back and the economy is now starting to,
people are just really enthusiastic about the economy.
The economy is just really, really good.
J Powell, shut up, but keep on talking.
I like Mark's academic J Powell impression. By the way. It's got something there. I don't know if it's all the way there yet, but
he'll work on it.
Something
he'll get there.
All right, very simple, guys. Great show today. We appreciate everybody out there. We are done for today. I did drop a link to our pro membership trial, and we do have our bear market survival guide mastermind group tonight after Trade Masters 8:30 Eastern. Any events on tackle trading, check the events page on our website. We will be back tomorrow, same time, same station. Subscribe, click the bell, come back and join.